So let's just touch on why this move. I know that you have been at the helm of reorganizing, reshifting and creating quite a sharp turnaround at Blue Financial Services. You have been successful thus far. Further 400 million rand converted into equity.
Yes, I think it's sort of a milestone for us at this point in time, because if you look at from the start of the recapitalization when Mabuya Group became the majority shareholder in Blue, to date, if I add this 400 million to it, it would be a total recapitalization of the group in excess of 800 million rand. And this 400 million to a certain extent brings to a close the recapitalization of the balance sheet from a restructure perspective.
Yeah. Is this the last of it?
From a restructuring perspective, yes, this is the last of it.
How much debt have you turned into equity since the beginning of the restructuring that has been occurring?
It's 675 million rand.
But essentially, we're talking about this all fair. You're actually diluting shareholders in a sense by doing this.
Shareholders will be diluted with this conversion, but I think a person needs to look at the advantages of the transaction. First of all, this conversion would have happened in any event in January 2014, because that's in terms of the debt restructuring agreement. There were a 3-year period in which a certain amount of debt, in terms of all sorts of calculations, would need to determine what should be converted. The difficulty is because it's not known what that amount is. It's better to do it rather sooner than later. And the turnaround from this perspective was ahead of schedule. And from that perspective, it was better to try and bring that conversion forward. And that's really what we've done. So first of all, it takes the uncertainty away of any future dilution to shareholders. But secondly, it also increases the profitability of the company, because it takes interest burden off balance sheet, not out of the income statement, of course.
So you're taking the knock now for something that should have happened down the line, as you were alluding to, 2014. So what kind of numbers are you expecting down the line, given the fact that you are now going to take debt, move it into equity, perhaps a slight dilution for shareholders, but actually the positives outweigh the negative that you were just alluding to?
I think the milestone really is the move from a pure turnaround play to more of into a growth phase. Because obviously from the growth that what we're wanting to do on the continent and through all our operations across Africa, we need to fund that. And from that we need a stronger balance sheet. So to a certain extent, it is the start of our process of capital raising for the growth that we need.
How much capital would you want to raise to expand further into Africa?
It depends on a variety of different numbers, but this is really just the start of that process.
Oh, well, let's look into the African continent, because we've got consumer spending that is rising. We've got a far stronger consumer. A lot of people want access to this unsecured lending that, of course, you're offering. But at the same time, here in South Africa, we're seeing quite a lot of players, and a lot of players doing quite well. I know you're smiling. At Capitec, we just saw Leon Kokinas, discussing his results coming through from Able. Strong numbers as well. Are you expecting a very strong revenue mix to come through rather from ex-South African markets rather than SA?
We're focusing our growth and expansion in the African markets ex-SA. Our focus on SA is basically currently it's less than 5%, and we anticipate it will remain below 10% from a segmented basis. And
with regards to competition outside of South Africa, you're not worried about players delving into the market that you're already in?
There's always competition. I
always ask you this, and you always say it's fantastic to have competition.
There's always competition, yeah. But I think if a person has to a product in a proper way, there's obviously room for growth.
Johan, you have said that you are concerned about a bubble emerging within the unsecured lending space. Could you give us an indication of what your concerns are regarding the South African market? Is it just in the SA market that you are showing a bit of concern, or would you say that it could actually filter through into the rest of Africa?
No, at present, the concern that we have is purely around the SA market and the growth in the unsecured lending book. We believe at some point in time...
Talking about unsecured loans in particular, because unsecured lending could mean credit cards, overdrafts, and a range of other products as well.
Yeah, the unsecured loans specifically. What we believe could happen is there could be a market correction coming up shortly, and we would rather just wait and see what exactly happens there before we recommit significant capital to the South African market.
But the argument would be that unsecured loans are sitting at fixed rates, so even if we do see an interest rate hike in the country going forward, or even if we do see a bit of economic crisis as well, we're pretty much in a very safe place. This is what is said.
I think there's two sides of the story. The one side of the story is that not all unsecured loans are fixed rate. And the way they position it to a certain extent based on certain events, the rates can increase. And I don't think there's a lot of sensitivity in the market. So should there be any rise in interest rates, it will have a definite detrimental impact on defaults. And then a person needs to look at the other side of the equation is on the funding of it, and what are all the new liquidity requirements that may become relevant. So I think there's a level of uncertainty as to what will happen. I don't necessarily think it's a massive thing, but there will definitely be some, our view at least, a market correction of some sorts.
Fantastic, Johan. We have to leave it there. Thank you so much for joining us.